Ask 10 traders which currency pair is traded the most, and you may hear 3 different answers. Some will say euro dollar, some will say dollar yen, others will point to pound dollar, gold, or whichever symbol is moving fastest on their screen. But the global data gives a clear answer. Euro dollar, written EUR/USD, is still the most traded currency pair in the world. That answer needs one important warning. Most traded does not mean most profitable. It does not mean easiest, and it does not mean every retail broker sees the same ranking. In this video, we will separate global turnover from retail popularity. Look at the current leaders, explain why liquidity concentrates in these pairs, and build a simple demo filter for choosing the pair that actually fits you. First, what does most traded mean? The strongest global benchmark comes from the Bank for International Settlements, often called the BIS. Its triennial survey measures activity across the over-the-counter foreign exchange market. That includes banks, funds, corporations, official institutions and retail-driven business reported through dealers. It also includes more than spot trades. The total covers spot, forwards, foreign exchange swaps, currency swaps and options. This matters because a currency pair can rank highly through hedging and funding activity even when it is not the most clicked symbol on a retail app. The latest BIS snapshot measured about $9.6 trillion of foreign exchange turnover per day. The US dollar appeared on one side of roughly 89% of all trades. Even more striking, every one of the 10 most traded currency pairs involved the dollar. So the first lesson is not merely that one pair is popular. It is that the dollar remains the central bridge of the global currency market. Now look at the ranking. Number 1 is EUR/USD. With about 21% of global turnover. In plain English, roughly $1 out of every 5 in measured foreign exchange activity involved the euro against the US dollar. Number 2 is USD/JPY, dollar yen. With about 14%. Number 3 is now USD/CNY, dollar renminbi, at about 8%. This is the major structural change. Dollar renminbi moved ahead of GBP/USD. Pound dollar. In the global ranking, pound dollar remains one of the most important and familiar major pairs. But the rise of Chinese trade, investment, hedging and financial activity has pushed dollar renminbi higher in total turnover. This does not mean every retail trader should immediately open USD/CNY. Onshore and offshore renminbi markets have different conventions. Access, spreads, trading hours and contract specifications can vary. The ranking describes global activity, not universal retail suitability. Why does EUR/USD remain number 1? Start with economic size. The United States and the Euro area are two enormous economic and financial centers. Companies hedge trade between them. Asset managers move capital between dollar and euro markets. Banks manage funding. Speculators respond to data and central bank policy. Then add the trading day. European hours bring deep euro liquidity. The overlap between London and New York brings both sides of the pair into the market at the same time. More participants usually create more competition, and that often supports tighter transaction costs under normal conditions. Then add the information cycle, Federal Reserve decisions, European Central Bank decisions, inflation, employment, growth and political risk can all change the relative value of the two currencies. EUR/USD sits at the intersection of two large policy stories. This combination creates a powerful loop. Deep liquidity attracts traders. More traders support better liquidity. Better liquidity attracts even more hedging and speculation. But deep liquidity does not remove risk. Around major releases, spreads can widen. Slippage can increase and price can move before a retail order is filled. A popular pair can still punish careless execution. Why is USD/JPY number 2? Dollar yen connects the world's dominant vehicle currency with one of its largest funding and reserve currencies. The pair is highly sensitive to interest rate differences between the United States and Japan. Treasury yields, Bank of Japan policy and changes in risk appetite can all matter. It also carries a different session profile. Activity can be meaningful during Asian hours, then expand again when Europe and the United States join. For a trader whose schedule is centered on Asia, dollar yen may be easier to observe consistently than euro dollar. But its behavior is not simply a copy of EUR/USD. Sharp yield moves, policy surprises or intervention concerns can create fast price changes. High liquidity and calm price action are not the same thing. What about USD/CNY and GBP/USD? Dollar renminbi is now third in total global turnover. But much of its activity reflects institutional trade, investment and hedging. Retail access can be fragmented between CNY and the offshore CNH convention. A high global ranking does not guarantee the same execution experience on your platform. Pound dollar, by contrast, is widely available to retail traders and is active during London and New York hours. It can offer strong movement, but it can also move more sharply than EUR/USD. That may suit some plans and break others. The same principle applies to USD/CHF, AUD/USD and USD/CAD. Each has a liquid global market, but each expresses a different mix of policy, commodity exposure, regional hours and risk sentiment. Now we can answer the retail question more honestly. There is no single public database that counts every retail trader across every broker in real time. One platform may show heavy EUR/USD activity. Another region may concentrate in dollar-yen. A broker serving commodity-focused clients may see more gold or Australian dollar activity. And gold, written ZAU/USD, is not a currency pair in the same sense. It is a metal priced in dollars. It may be one of the most watched retail symbols, but it should not be inserted into a currency pair ranking without explaining the difference. So if someone asks, what pair do traders trade the most? Use this two-part answer. Globally, by measured foreign exchange turnover, EUR/USD is number one. On a specific retail platform, popularity can differ, and the broker's own volume or client position data is needed to verify it. The next mistake is choosing a pair only because it is popular. Popularity can help through liquidity and lower normal trading costs. But your result depends on how the pair behaves when you are actually available. What events move it, how wide the spread becomes, and whether your method matches its volatility. Use this 5-question filter on demo. Question 1. When can you trade? Mark your real 2-hour or 3-hour window. Do not choose a pair whose best liquidity occurs while you are asleep or working. Question 2. What is the normal execution cost? Record the spread during your session. Then record it again around major news. A strategy with a small target can be destroyed by a cost that looks minor on a larger chart. Question 3. What usually moves the pair? For EUR/USD, watch both Federal Reserve and European Central Bank expectations. For USD/JPY, monitor rate differences and policy risk in both countries. Know the two sides of every pair. Question 4. Does the pair's movement fit your stop logic? Do not start with the profit you want and force a stop around it. Find the level that invalidates the trade idea. Then decide whether the required risk is acceptable. Question 5. Can you follow one pair consistently for 20 demo sessions? A focused observation log often teaches more than switching symbols whenever a candle becomes exciting. Create a simple table. Write the pair, your session, the usual spread, the important events, average movement during your window, and the condition that makes you stay out. Compare EUR/USD with one alternative, not with 10 symbols at once. After 20 sessions, review the process. Did you see cleaner structure? Were spreads stable? Could you follow the important news? Did the pair move enough for your method without forcing oversized risk? The best pair is not the one with the largest global percentage. It is the liquid pair whose schedule, cost and behavior fit a repeatable plan. So here is the final answer. EUR/USD is currently the world's most traded currency pair by global turnover. USD/JPY is second. USD/CNY has moved into third place ahead of GBP/USD. And the dollar sits on one side of every pair in the global top 10. Use that ranking as context, not as a trading signal. If you want to test the 5-question filter without risking real funds, use a demo account, compare 2 pairs during the same session, and judge your execution before you judge the result. The demo link is in the description or pinned comment. Educational content only, not investment advice.